Our first is going to be Ashish Singal.
All right, thanks Paula, thanks Eddie for organizing as usual. So just a little background about myself. I work for a hedge fund and I develop quantitative trading strategies for them, mainly in Python in terms of the language. And basically, you know, so that's what I do. And I made this project kind of as a side project. And effectively what it is it's trying to bring quantitative tools to non-quantitative or non-quant investors, but who still understand, you know, the basics of beta and all those kind of things. So not your regular consumer, but professional investors who need a tool to understand their, you know, the quantitative side of things. So of course, there are tools out there that exist already. You've got like the Yahoo Finances of the world, and every broker, whether it's E-Trade or you know, Interactive Brokers, they also have some sort of, you know, portfolio analysis tool. But a lot of those don't really give you the depth of quantitative analysis that you really want. And so on the professional side, you have the Bloombergs, you have the Novus, you know, systems that range anywhere from $20,000 a year all the way up to $300,000 and more a year for that are marketed to hedge funds and large institutional managers that have these advanced tools. But the problem with those is, first, it's a big, long process to actually get those installed, and then they're not user-friendly at all. You know, they'll require an IT department to help integrate those systems, and they're not really the clean, intuitive feel that you expect from, you know, your regular apps nowadays. So the solution is an accessible, powerful, intuitive, and actionable system. And so, you know, what that effectively means is that it's easy to use, but it doesn't really compromise on the power that you have in terms of you know, your analysis. It's intuitive and it's actionable. So you can actually take actions based on the recommendations or based on the analysis that it's giving. So the target market is basically fundamental investors. And, you know, little do we realize in the quant world where I'm from that 80 to 90% of investment decisions are actually made still on a fundamental basis. So these investors have been talking to the analysts, they've been, you know, analyzing the balance sheets, they've been kind of building their Excel models. They're not using the quantitative tools that we use, and that's, I think, an addressable market to give them a sense of the quantitative numbers as one more piece in their puzzle to kind of make a proper investment decision on. The market size numbers are a little bit difficult to come across. I won't go into that. Obviously, there's, you know, 80 trillion of just investments assets under the traditional fund management size. The data, financial data, is a small portion of that, about 24 billion. And 85% of investors, like I said, or greater, are non-quantitative, but still, you know, understand some of these tools. So with that, I'm just going to show a little demo. Okay, so basically you just enter your email address. Got a little pin here. All right, finally. So here is basically your portfolio, which you enter in on the top. And so you enter in the amount of, the ticker and the amount of shares over there. And as you can see, I'm quite wealthy today. Got $1.3 billion. This is actually the portfolio of a hedge fund that we were just looking at. And so unfortunately, it's not mine. And so you can see kind of today's performance by stock. And the interesting stuff isn't really the ticker shares close value. You get that from everywhere. But what this shows is your beta. It shows your expectation based off the beta in relation to the S&P index. It shows your alpha for today. And it shows your total stats for today. So you can see today, your alpha was 12 basis points as the portfolio rose by 1 basis point, but the S&P fell by 12 basis points. And your portfolio beta was 0.9. So if you multiply all that together, you'll get an alpha of 12 basis points. If you go down, you'll see things like P&L contributions, which stocks are contributing the most to your P&L. You can also see some momentum factors here. And then you can see your portfolio weights as well as your risk weights. And so where the risk weights differ from the portfolio weights is the risk weights are actually volatility adjusted as a component of your portfolio. So although you might have a nominal weight of 20% in a stock, if it's highly volatile, it'll show up in a risk weight of more than 20%. Then it'll also show you a beta analysis that goes stock by stock and shows you both the portfolio correlation, the correlation to the S&P, and the beta to the S&P. And so, one actionable item here is if I say, okay, I want to reduce the beta in my portfolio, I can short all my positions by beta, and I can see that MU, I'm not sure what company that is, but that's contributing the most to the beta of my portfolio. Finally, you can also see your sector correlations. And so you can see your correlations to different sectors. These are all ETFs over here. And they represent different sectors. So you can see what the benchmark is correlated to that sector as well as what the portfolio is correlated to that sector. Below that, you'll have market risk exposures that show you how your portfolio behaves when interest rates rise or interest rates fall. How it, commodity prices, different ETFs that are representing different market factors, it'll show you that. And then finally, at the very bottom, there's some information on the fundamental characteristics of your firm. So it shows you, for example, how much dividends these firms are paying and what the impact to your total earnings as a percentage of your portfolio also is contributed by these individual stocks in your portfolio. So effectively, it's trying to answer questions like, I'm scared that oil is going to fall. What stock should I reduce my exposure into in order to take care of that? So it gives fundamental investors quantitative tools to kind of get a clearer picture of how their portfolio will perform. And it's just a side project right now, so I've spent probably the equivalent of a couple weeks, working on it. The stack is it's in PHP on the front end. The stuff that I'm using is some jQuery, CSS, if anyone cares about this kind of stuff, and the Python backend for the actual analytics calculation, and that's about it.
Does anyone have any questions?
What are your data sources that you're using for this?
So it actually, all it requires is end of day price data. And so I use a data service that provides simple end of day price data for this that I won't disclose.
So if you had to distill it down to what new information I'm getting from this site, I'll be frank, I didn't see it. I've been in finance for over 15 years, and I'm trying to figure out what is it that you're presenting, or this model is presenting, or this algorithm is showing me that I can't get elsewhere, and I haven't seen that yet.
So effectively what this answers for you is, I'm not sure what type of investor you are, how you look at your portfolio, but let's say you're a fundamental investor, like I'll put myself in the shoes of a hedge fund manager that I'm good friends with and his perspective of this application. So what he essentially does is he looks at mainly banks, mainly a couple sectors, and he tries to find deep value bets for long-term investing, anywhere from 18 to 24 months. Now, his specialty is to look into companies' balance sheets. It's to talk to the company management. It's to basically make a macro view on what this company is going to look like in 24 months in terms of its cash flows and all that kind of stuff. And so he's got 15 companies, fairly concentrated bets that he takes over there. What he doesn't know is how his portfolio is actually reacting to different things that might not be clear to him just taking those bets. For example, he might not really know how much a 1% rise in interest rates is going to impact his portfolio. So
is your target client hedge funds?
Eventually, I want it to be professional money managers, yes.
Because the reason I'm just throwing this out there because, again, based upon my experience, any hedge fund manager or portfolio manager who's not able to stress test his portfolio based upon interest rate moves or do some type of standard deviation analysis, or see how alpha is impacted by concentration risk or attribution analysis, should get out of the hedge fund business, because they have systems and models that are vastly superior, that parse this information down to much greater degree than what you've shown here. I thought maybe this was a retail level product, that you're trying to go after the average consumer who's trying to do a fundamental analysis. And that's why I was still saying, I was trying to find out where is the secret sauce here? Where's the differentiator? You go to Bloomberg, or you go to Yahoo Finance, or you go to even S&P's website, you can get a lot of this information, downloadable, and generate the analysis that you've done here.
So as I went through in the beginning, and thank you for that, it's valuable feedback. But as I went through in the beginning, in terms of the professional tools and the free tools, we kind of segregate them, right? So on the really professional side, you have, Bloomberg for one, but then even more than that, you have tools like Novus, which really do like performance attribution and all that kind of stuff. What you need in order to get that kind of, those portfolio details in is you need an entire IT department. You need a couple guys to kind of focus on, integrating that with your back office systems, with all this kind of stuff. In POBOT, it's much more like, I'm not trying to replace those tools. I'm trying to give these hedge fund managers or these professional money managers a much easier way to quickly test out their portfolio without having to go through the legwork and the cost and all that kind of stuff on that side of things. And so you're right, SAC Capital is not going to use this, but a smaller family office, an investment advisor with maybe 20 clients, and he just wants to see how his client portfolios look quickly and easily, he's going to be using these tools.
So what I like about this is that it's simple to just get started with it. I mean, there's no friction really, it seems. Even the pin is 1, 2, 3, 4. So, how are you trying to market this? Like, are you trying to sell this eventually, or are you just going to keep it as a side project for free?
I don't know the answer to that question. We'll see where it goes. I would love for it to, catch. I've got some feedback from different people to show like, okay, I would love to see that, this is a great starting point, but I also want to know, if I'm trying to add Abercrombie and Fitch in there, how does it relate to my current portfolio? So I want to, example portfolio as to like a post Abercrombie and Fitch, a pre Abercrombie and Fitch, and see how they compare. So there are a lot of things that I'm collecting feedback on, and if any of you guys have feedback as to things that you would like to see, I'm open. So I don't know where.
I think another thing to think about on that same line of thought is portfolio transitions. When people go through portfolio transitions, they're looking at what mix of stocks comes in. So not just one particular stock that you add in, the impact of that stock to the portfolio, and you can look at a whole mix of things that change within a portfolio. And if we can provide a tooling to play those scenarios, and it's more build those scenarios, play those scenarios, and look at it in terms of what mixes can possibly stay within the parameters as a quick tool. Could be I don't know what you call it. I missed the early part of the presentation. But I think there is value in it, developing it as a quick tool that, like you said, that can, and if you can position it that way, I think you can get some traction before people.
Thank you. So what, you mean like if you take 10 stocks or something instead of just one?
It could be 10 stocks, or depending on the size of the portfolio, right? And if you are going through a portfolio transition and you want to see the impact of a bunch of different things coming in, a bunch of things going out, what are the implications of that from a fee perspective, from a risk perspective, right? People want to see that. And this happens a lot on the fund of funds side. Russell Index does that, and a lot of other firms do that. They have tooling around it, they have advisors around it. But if you can bring it to the micro size, bring it and provide that tooling and the functionality around it and deliver that very concisely, I think you may have something of value.
Thank you.
All right. Thank you so much.